Hey, and welcome back to a new video. I hope you're having a good trading week so far. Today I want to talk about a topic that I think is very important. It is actually very simple, but it's often overlooked and it can make a very big difference in your trading. And the topic that I will talk about today is identifying higher time frame direction, which means that I'm trading on the 4-hour time frame, but this is also applicable if you're on the 30-minute or the 1 hour. And I only take the trades, and most of my trades are in the direction of the daily time frame, the one that we can see here. So when the daily time frame, for example, is showing that we are in an uptrend, then I only look for trades on the 4-hour time frame that also go in the same direction as the higher time frame. And to find and to identify the direction of the higher time frame, there are a few concepts that you can use. It's really up to you which one you feel most comfortable with, and I want to show you the ones that I use and which ones I think are the easiest to understand and have the best applicability. So first of all, obviously I spend a lot of time analyzing highs and lows. Although this is very simple, it is very effective as well. So you can see, for example, when we start here on the most left, you can see price was in this uptrend, and during the uptrend price always made higher highs and also higher lows. This means that during the trend the buyers were always pushing price higher, and they were buying the dips sooner and sooner, so that price was not able to go down anymore. But then here suddenly we made this high, but then here on the next attempt we made a similar high, and here as well. So I prefer to use trend lines as well, with just analyzing highs and lows. So you can see that once we saw this high and then we moved lower, although price made a higher low, we were still in this range here, and obviously this strong uptrend was over. So when I was looking on the lower time frame, I would be more cautious about long trades, especially once we are moving into this area. But nevertheless, it still looked overall more bullish than bearish, because we had this triangle forming, and then once we broke here the trend line, then it was clear that we were resuming the uptrend until we moved into the highs here. We can see that once we moved into these highs, the next retracement was very low. You can see that we almost broke the previous low when we use a trend line again, which is one of my favorite tools. And then here on the next move higher, we did not reach the uptrend, the previous swing high, which is a very bullish, very bearish signal, because the buyers were not able to push price as high anymore. The buyers were losing interest, and this became very obvious. Then here as well, whereas price made higher lows here, price then suddenly was making equal lows, and if we extend this trend line, we can see that price was kept on pushing into the lows, whereas on the other hand we were not moving as high anymore. Then we had this little spike here where we tried to make a new high, but then price failed, and at that point then it became obvious that we were losing the buying interest, and the people who wanted to buy were not interested anymore. And when we extend this trend line, we can see that once price broke it, we accelerated to the downside, and then we started to move lower. You can see we made lower lows, lower lows, lower lows, and also lower highs here, here, and here as well. And just by using the analysis of highs and lows and using trend lines along with that, we can already see and get a feeling for the direction if buyers are more in control or sellers. So this is a very good starting point. Then personally, I always use moving averages. For the higher time frame, it doesn't really matter which one you're using. We can use a 50 period, for example, and then we'll already see how to use it. And then the actual period that you are using for your own purposes is can be very different depending on your trading style. So for example, if you are a day trader and you have multiple trades per day, you're on the lower time frames, then typically you want to use a smaller and a lower moving average. And when you are a swing trader and a long-term trader, then you are usually using a higher and a larger moving average. So now you can see that once we plotted the 50 moving average on our charts, here during this uptrend, price was always above the moving average. Then here we suddenly broke the moving average, and then we started hovering around it, and we can see that the price was not respecting the moving average anymore, and it also fell in the same area as our range. So this is very important to know about moving averages, that once price is above a moving average, or in this case below a moving average, when we look at the downtrend, then it signals a strong trend. But once price breaks the moving average and then starts hovering around it, we are in a sideways moving market, and then we need to wait for a new directional impulse. Like in this case, we had the break of the trend line. Here as well, we broke the trend line, and then we started this new trend again, and then we resumed our trend. Here as well, here we were above the moving average again. Price was trending very strongly, and then once price broke the moving average, then we entered this range as we before discussed, and price then just hovered around it without much respect, and also no directional information. Another indicator that can be used and which is very popular is the ADX. So there are 3 lines on the ADX, as you can see here: the green line, the red line, and the black line. For our purposes, we will for now take off the ADX, which is the black line, and just focus on the green and the red one. And you can see that here during this uptrend, the green line was well above the red line, and they were moving away from each other. Then here, once price broke the moving average, the ADX also, and the lines from the ADX, which are called DI plus and DI negative, they also crossed. And then once we were in this range, you can also see that the ADX was fairly low. They kept crossing each other, and so you did not have a directional information. Then here, once price broke the trend line, we can mark it on our ADX. So you can see the crosshair, and then once price broke the trend line that we drew here, the green was already well above the red one, and it was rising, which then signaled this long trend. And then again, once price entered this range here at the top, the ADX, both the DI lines were very close, and they kept crisscrossing each other, and so we did not have a directional information. And then again, once price broke this trend line here, we can mark that again on our ADX. Here you can see we marked a time when the price broke the trend line, and at that point the ADX, the red one, was well above the green one. They were moving away from each other, and you can already see that this pointed to a successful breakout, whereas when we look here previously, when we moved this line a bit to see when price attempted to break the trend line previously, it looked very different. The lines were just above each other around the 20 area, so you can already see that this is a very different scenario to what has happened here. And then once we were in this downtrend, the red line was well above the green line, and price was moving lower very fast. And this is basically how you can get started. I mainly use this directional information on the daily time frame then as my first filter. So when I do my Sunday analysis, I come up with the direction for the coming week. And once I know if the market is in a bullish or in a bearish phase or in a range, then I can adjust my trading plans on the 4-hour chart accordingly and plan my trades much better. And it makes for much better and smoother trading opportunities once you learn only to trade into the direction of the trend again, and stop fighting the trend and always trying to go counter the trend and fight with the overall market conditions.